Nvidia's latest earnings revealed a critical piece of the puzzle. Supply constraints are shaping its growth, but what does it really mean for investors? In today's Stock a Day episode, I'll break down Nvidia's supply chain dynamics, explore how they're navigating these challenges, and uncover why competitors like AMD might also benefit. Hey there, Tamir from Fibonacci-Traders.com here with Nvidia Stock a Day. So like, subscribe, and let's get started. Supply constraints. What does it really mean for the company and how it impacts Nvidia's growth potential? We'll explore some important updates on the supply chain that Nvidia investors should not miss. Essentially, Nvidia's revenue growth is capped by how many chips TSMC, their primary manufacturing partner, can produce, not by demand, which is practically infinite in the current AI driven market. This explains why Nvidia's stock saw a dip of about 3% after their earnings report last week, even though the company delivered very strong results. But before we dive deeper, let's talk about two important financial events on Nvidia's calendar. December 3rd, Nvidia have the US Global Technology and AI Conference. This event will likely provide updates on the AI space and Nvidia's role within it, including Q&A sessions that could offer fresh insights for investors. On January 13th, JP Morgan Healthcare Conference. Nvidia's involvement in healthcare is often overlooked, but I believe this sector holds multi-billion dollar revenue potential for the company. Last year, same conference, Nvidia showcased its cutting-edge healthcare solution, and I expect similar updates this year. For long-term investors, these events could highlight the breadth of Nvidia's growth opportunities. Positive signals from the earning call Nvidia's management shared some bullish updates during earnings call. Nvidia's ability to secure more chips from TSMC than previous expected is a clear sign that supply constraints are easing. Higher Blackwell revenue. Nvidia now anticipates higher than expected Blackwell GPU sales in Q4, driven by this improved supply. These developments shows that Nvidia is not only managing supply chain challenges but also capitalizing on growing demands. Understanding Nvidia's growth constraints, Nvidia's quarterly data center revenue growth over the past year 18 billion, 22 billion, 26 billion, and 30 billion US dollar demonstrates steady increases. However, this growth in supply driven, not demand driven. TSMC has been increasing Nvidia's chips production capacity by about 4 billion US dollars per quarter, and while that's impressive, it underscores the bottleneck Nvidia is facing. This supply cap is why Nvidia's revenue growth has a ceiling. Demand far exceeds what TSMC can produce. For example, if demand for chips is 200 units, but only 100 can be produced, Nvidia's share of the supply might be 90 units, while AMD and other competitors split the remaining 10. This limits Nvidia's ability to blow up earnings consistently. How other AI players benefits while Nvidia dominates the AI chip market? Supply constraints create opportunities for competitors like AMD and smaller AI chip makers. Why? TSMC is doubling its advanced packaging capacity, and Nvidia has secured 60% of that expansion. However, the remaining 40% is allocated to other players like AMD, Intel, and custom chip makers from Microsoft, Amazon, and Google. Growth potential for smaller players. For instance, if AMD's AI chip shipments grow from 10 units to 20, that's a 100% increase, even though Nvidia's growth is absolute terms is far greater. This dynamic makes the AI space lucrative for second-tier players, even as Nvidia continues to dominate. Now, what Wall Street adjusted expectations? Wall Street analysts are becoming more adept at estimating Nvidia's revenue potential by factoring in supply constraints. This explains why Nvidia's revenue beats, which were as high as 8% earlier this year, have shrunk to around 4 to 6%. With better projections, analysts are setting more realistic expectations, reducing the magnitude of revenue surprises. Let's talk about long-term outlook. Nvidia remains the leader despite supply constraints. Nvidia's dominance in the AI market remains unchallenged. Recent reports that Nvidia has secured 60% of TSMC's advanced packaging capacity through 2025 reaffirms its leadership position. While supply growth will continue to limit Nvidia's short-term upside, the long-term potential remains enormous as the company scales its capabilities and the AI revolution accelerates. Now, here are my final thoughts. Nvidia's supply constraints are a double-edged sword. They limit short-term growth but ensure steady expansion in a market where demand vastly exceeds supply. Meanwhile, competitors like AMD can also benefit from incremental gains, making the broader AI semiconductor space a worthwhile investment landscape. So let me know in the comments below, are you bullish on Nvidia or are you looking at opportunities with second-tier AI players like AMD? So once again, thank you very much for watching this video. I do hope you found it helpful, educational. If so, like, subscribe, check the links in the description below for more educational resources. Until the next video, stay safe.